morning, happy Monday. We get another week to continue building the lives and the careers that we really want. And as you can see, new setup. Very excited about it. Got a new whiteboard. But anyways, in this video, what we're going to be covering are the 3 principles for building wealth. And most importantly, this video is about the long term. It's not about how to make money this week or this month or this year. It's how do you build wealth over the next 20 to 30 years. So how do you set yourself up with a sense of certainty that when I hit X age for retirement or whenever you're able to access your tax advantage accounts like your 401k, your IRA, whatever it is, you actually have a plan to be able to build wealth over the coming decades to make sure that those are in healthy, good, fat shape. So we're going to touch on 3 main things. So first is invest in yourself and become more valuable. And then the second is learn how to influence, sell, and negotiate. And then the third part is invest in cash flowing assets and limit speculation. And so we'll go through each of those 3 and then talk about how those roll into building wealth. So let's get to it. All right, now the biggest problem when people think about building wealth is we're all taught invest, let it compound so that we eventually have lots of money later on. And then everybody's biggest objection there is, well, I don't have money. I don't have the resources to invest. And that's because they're thinking about investing solely in terms of money. The best investment you can always make is in yourself. And that's by Warren Buffett. That's his quote. And so this first part, invest in yourself and become more valuable. When we invest in ourselves and we as individuals, our brains, our skills, our knowledge, our experiences, as we become more valuable, we're then able to make more money. And that money that we're producing, that is what's going to give us the resources to be able to invest in the financial assets that are then going to build over time and eventually build our wealth. So the first place that we have to start in order to generate or build wealth is it has to start with us. Assuming that you're not sitting on $1 million and can just chuck that in the market and see what happens. So for most people, what they have to do is begin by building themselves. And kind of how I want to introduce this is first with this equation. And this is, you can think of anything in the world in terms of trying to figure out a value for anything. It can be really broken down to these 3 parts. So you have value creation times value delivery equals total value. And think of any business in the world. Any business or any investment has some type of value creation. It's valuable for some reason. But then the second part is how often is that thing being distributed or other people, benefiting from this value created. And ultimately that's the total value realized. Now, you've probably heard of people where they've had some incredible business idea or some incredible product or invention or whatever, and then it died. And it never became a thing. And then all of a sudden it's resurfaced like 10 years later and that person becomes, a multimillionaire. Why? Because the first person that, invented it or created it, or why a lot of businesses fails, it's not that they don't know how to produce value. They're creating value oftentimes, but they're not delivering it, which is sales and marketing. So you can think of this as product development, creating a valuable product or service that people are willing to pay for. But then the delivery part is the marketing and sales. And then it's how often are you selling these things to X number of people or X number of businesses is going to equal the total value realized by the business. We as individuals are no different. And going back to, I want to give a quick example. So think of McDonald's, right? They have like $7 or $10 Happy Meals. Let's just say it's $7. So if they sell a Happy Meal or something for $7, but they sell 1 billion of them, they deliver 1 billion meals, well, their total value is $7 billion in sales. So whatever it is, there's going to be creation, there's going to be delivery, and those multiplied is going to give total value. So how do we apply this to ourselves, our careers, our lives? How do we build wealth with this? Well, the first and most important thing is we need to become able to create more value. So in terms of value creation, it's our thoughts, it's our ideas, it's our creativity. Being able to solve problems and also innovate and create futures or improve things in ways that other people can't do. And the only way to do that is through investing in ourselves. So I want to highlight 7 different ways that we can all be investing in ourselves consistently forever going forward, because this is not just a thing where we should invest in ourselves, get a little bit better and then make a little bit more money and then sit. This should be a consistent thing, because the more that we continue doing this, we continue compounding ourselves. And information and knowledge compound the exact same way that money does. And so when we keep doing this, think of it as, when you learn something, think of that as one dot. As you learn more things, think of all those dots that are being built up in your head. So you could have, let's say, one thing, and you learn all these different things. Well, when you learn all these different things, your brain naturally associates and connects all of them. And so the more dots that you have, the more connections that you have. And the more connections that you have, the more creative thinking that you have. And when you think more creatively, or when you think differently than a lot of other people, and you're able to solve bigger problems or come up with better ideas than other people, you're going to be paid more. So all of these dots start connecting to one another in your head, and they start compounding their associations. So I'm not going to go through all that, but you get the point. The more dots you have, the more that you learn, the more you compound your mind, the more you're able to be more creative, add more value, solve bigger problems, and be ultimately paid a lot more money. So how we can invest in ourselves are books, courses, seminars, programs and coaching, certifications, degrees, and other additional experiences that are relevant to building our skills, our knowledge, and our experiences. And one way that I know a lot of people do this is literally just doing their own projects, where rather than waiting for the opportunity or the responsibility to do something, they just say, screw it, I'm going to do it myself first, get the experience, and then prove to other people, hey, I can do this. Look at, my previous examples of where I've done this. So if you're waiting in your career for someone else to give you the opportunity to do something, and in your mind you're thinking, well, at that point, then I'll learn it, that's going to be a reactive approach to learning and building your own skills, knowledge, and experience. So instead, you want to just build your own experience, figure out how to do it, a project or a side business or freelancing or volunteering for other people, and then consistently be feeding the mind with these other ways. All right, so now the second part, you might be wondering, how does influence, selling, and negotiating have to do with me building a long-term wealth? Well, again, it goes back to that equation of value creation times delivery equals total value. Because again, these first two parts are just about how can we generate more cash flow, more income in our lives, because we need that cash to invest in order to build that wealth or build that long-term fortune. So this is for us to make more money. Now, the reason this is so important, influence, selling, and negotiating, is because you're going to need to be able to influence people in the workplace that your projects or your ideas or the way that you presented is a good idea, where people say, hey, yeah, we should move forward with that. Well, that's going to improve your performance review. And if you have a better performance in the workplace, you're going to then be able to later on negotiate for an increase in title or a promotion or increase in compensation. You'll be able to negotiate for more responsibilities. So in order for you to accelerate your career and get ahead of the average pack, or to get ahead of whatever the company decides is, you're going to be in this role for 3 years, and then this role for another 3 years, and then that role for 4 to 5 years. And then in order to escape that very structured, rigid format that a lot of companies have, the only way that you can get out of that is through negotiating. And you have to know how to negotiate in order to be able to run your own career how you want to be running it. So once we know we are valuable because we've learned our skills, our knowledge, and experiences, and we've invested in ourselves, we're then going to have ideas as well as ways that we need to communicate that to other people, influence them, and get them to want to agree with us so that we ultimately can get what we want. Now, a lot of people believe that that's selfish. Is it really selfish to influence somebody to get them to take care of their health? Is it really selfish in order to ask for the compensation that based on industry metrics that you at a minimum should at least be receiving or being paid? And is it selfish to ask to negotiate for an increase in compensation, a raise, because you know that you're performing in the top 10%? If you're performing in the top 10%, like if you have a bell curve and this is the average person at your job, if you know that you're performing in this top percentile of like, call that the 5 to 10%, is it fair to you that you're being paid the exact same as people who are just chilling and, I mean, just getting by, just barely meeting expectations? Probably not. But in order for you to be able to communicate that to whoever it is that you're working with or for, you have to know how to sell and negotiate that, hey, I should be paid for this and not this. I should not be getting a 3% raise this year, barely beating or matching inflation or sometimes underperforming inflation, but instead I should be getting a 10, 20, 30% raise this year. And I've seen people that were given, previous clients of mine that were given 3 to 5% raises and then ended up re-putting together and reapproaching how they're going to negotiate. They went in and he ended up walking out with a 34% raise in his compensation. And that was his base. So knowing how to negotiate is absolutely crucial for you to make more money in your career and then ultimately have the resources to invest for the long term. So I want to share six titles that I think are really great in terms of understanding positioning, sales, marketing, negotiating, and the reason these are great is because they're not the typical just sales books like always be closing. It's not about that. It's selling, influence, and negotiation is about understanding human beings, understanding human behavior. Why do people do what they do? Why do people think what they think? Why do they make the decisions that they ultimately make? What drives that? What is the psychology behind it? And so I think these are really great books for doing that. So the first two are Mark Goulston. I think he's phenomenal. I really enjoy his work, and I think you will too. And I think you're going to get a lot out of it because you're going to, through his books, you'll realize that it's not about convincing or manipulating someone into doing something. It's really about, is there trust? Is there a relationship? Do you have rapport? And are you framing things in a way that it's speaking to the other person's self-interest? It's not just about what we want. It's about deeply understanding and respecting and ultimately having empathy for the other person. And once we do, that builds a rapport, it builds an understanding and trust, and then we begin to frame or position things in the other person's benefit. So these two, Just Listen to Real Influence, are great. Never Split the Difference. Quite a few people have heard of that one. It was a New York Times best-selling book, and it's so Chris Voss, he was previously a hostage negotiator for like 30 plus years or something for the FBI, and he takes a very human behavior-based approach to negotiation. It's awesome. Highly recommend it. And then Marketing Made Simple by Donald Miller. Even though this is a marketing book, the way that he structures it, it's focused on how do you understand how to position a message and how do you capture attention, and then also how do you build, a funnel, if you will, which is really just influencing people to ultimately make a decision in the end. And then Unlimited Power by Tony Robbins. This is a phenomenal book for better understanding not only yourself, but everyone else around you. And the better you understand people, and he also talks about influence and persuasion in here, but the better you understand other people, the better you can communicate with them and ultimately influence. And then the last one, Spin Selling by Neil Rackham, is a strictly sales-focused book. But what it does is it breaks down the steps, the chunks that are really necessary in order for influencing somebody to make a decision. And a lot of people think that, I need to talk about this and this and this and this, and they just kind of mix it all up and jumble it up when they actually have the conversation. What's really important is there needs to be a sequence. It's kind of like unlocking a bike lock or something, or any lock, where you might have 5 numbers. You can have the 5 right numbers, but if you don't have those numbers in the correct order, it won't unlock. And influence is no different. We have to, when we're trying to influence somebody to make a decision, it needs to be in a specific order that's going to influence them. All right, so now this third part, I want to talk about what do we do once we're actually making money and we've already, started putting some aside in terms of savings. So we're creating a 6-month to 12-month cushion. And I want to quickly talk about that cushion. A lot of people believe that it's a should do. It's a must. You must have money on the side to protect yourself. And really, it's a risk mitigation strategy. What if a medical concern comes up? What if the economy falls apart like COVID, where people lost all sorts of jobs? Or what if you want to do something strategic in your life and you're going to need runway? You're going to need 6 to 12 months to be able to cover all expenses. so that you can make that transition or start that business or do the freelancing or take the sabbatical or whatever it is that you want to do. You're going to need cash on the side. So step one is always put some money aside for savings first. But then let's say that you're now asking yourself the question, well, I'm making this money. I'm already putting some aside. What do I put my money into to grow it long term in order to build wealth? Well, there's a million different ways that we can think about it. And so I just want to kind of boil it down to a couple core principles, like invest in cash flowing investments and limit speculation. Now, speculation is when we don't know what's going to happen in the future and we're guessing, we're assuming, we're hoping that this thing is going to happen. And the easiest way to think about that is when people make investments into stocks or specific companies or, for example, how some people invest in crypto is they're hoping and assuming and guessing that the price is going to go up. And maybe, when people are investing in gold or silver, which are also reserves of value, they're making those investments based on the supply and demand. And, for them, that is a fundamental analysis to understand the supply and demand dynamics that they believe is going to drive price appreciation or price decline. And a lot of people are not doing any analyses at all with a lot of their investments. They're just kind of chucking money at it and hoping that in the future the price is going to go up because that's what everyone else around them is saying. So what we don't want to do is guess or assume or hope and pray that a price is going to go up. We don't want to do that. And this is the cash flowing investments principle. It's a principle that Warren Buffett has lived by his whole life. So there's plenty of interviews where people have asked, Warren, what's your take on gold? And he's like, well, if I could choose between gold and a farm, I would buy the farm and invest in the farm because the farm is going to grow product, fruits and vegetables, and I can then sell those and earn a return and then reinvest in the farm, build the farm, and continue growing and building the farm until eventually I'm producing significantly more cash and earning a significantly greater return on investment. So that is the biggest difference between price appreciation and cash flowing. Is price appreciation is the value of the thing itself, but cash flowing is what value is this thing spitting off and returning to you every year or every month or every day. And when we can focus on cash flowing investments, then we're able to take that cash and consistently recycle it back into the investment and compound the growth over the years to come. And that's what we want to do. So businesses are a perfect example of cash flowing investments. Well, there are private businesses and public businesses. Public businesses would be like stocks. If you go on the stock exchange or any of the different trading platforms, if you buy a stock or equity in any type of business, it's on a exchange, well, that's going to be a publicly traded stock, which means it's a public business. But there's also a lot of private businesses that people invest in. Sometimes they invest in the equity and they actually own an ownership stake of the business, or sometimes what they do is they lend money and they loan money to the business owner and then they earn a return on that investment. Or the other thing is cash flowing assets. So cash flowing assets is anything that is not technically a business. It's a thing that is producing revenue. So super simple example that everyone's familiar with is real estate. Well, owning a home and renting it out to someone, well, the home itself is not necessarily a business. It's an asset. But renting that thing out to people is producing revenue. And now with the sharing economy, a lot of people are doing this. They're buying investments or buying assets and then loaning them out or renting them out to people and then making money from that. So we can invest in businesses, which are cash flowing. We can invest in cash flowing assets. And then also debt or lending money to other people is also going to be generating a return and cash flowing for us. So the other kind of 4 principles that I'm not going to explain in this video, but I want to introduce you to them. And if you're super curious, I encourage you dive in and start learning about these. But 4 massive principles that we want to be implementing into our security investments. And that's the other thing. I want to talk about the difference between security and growth buckets. So think of the security bucket as retirement money. It's money that you're not going to be able to touch for decades or for a very long time. And you're investing strategically and consistently and predictably into those investments so that they can consistently compound and grow over 15, 20, 30 years plus. Now, a lot of people confuse the security bucket with growth investing. And growth investing is usually going to be a lot more risky, and you might lose all your money. You might lose, half of your money. We do not want to lose half of our security bucket. That is not the goal of investing for retirement. And so if you're going to, say take X dollar amount and put it all in Nike or put it all in a startup tech company or anything like that, that should not be with retirement money. That should be with like growth money that if you lose it, it's not going to cost you too much. And so we want to have kind of delineation between this is money that I'm not touching for 20, 30 plus years. This is money that I'm trying to build wealth in the short term, we'll call it 5 to 10 years with. And so we want to have those differences. So when we talk about asset allocation, diversification, minimizing fees and minimizing or maximizing tax benefits, you want to make sure that for your retirement bucket and your security bucket, your investments are implementing kind of these four. And assuming that you're not actively playing a role in them. So again, I'm not a wealth advisor, I'm not a wealth manager, no recommendations here, just thoughts for you to explore, more information for you to dive into if you want to have a deeper understanding of how you could be setting up that security bucket for your long-term building of wealth. And one last thing I want to include is how do we go about investing in these things? Because that's kind of another question is people say, all right, well, that's great. Invest in businesses, cash flowing assets, and bonds and loans. How do I do that? That's where there are a lot of diversified index funds that are very low cost. And if you're using them in your IRA or 401k or a tax advantage education fund, like that gives you the tax benefits. And then in terms of asset allocation, that's just breaking it out across equity or debt or commodities or gold or other types of assets. Asset allocation just means you're invested in multiple types of assets. And by doing so, you're further reducing the risk and making the returns more predictable over time. So in terms of investing in these, there's ETFs, there's index funds, there's mutual funds, and those are like baskets of all the different companies or different bonds all put into one investment. And so that way, by buying the basket, you're diversifying those investments. So again, no direct recommendations or anything here, just information. All right, and the last thing I want to share with you today is a little bit of a bonus. So section 4 is listen and learn from people who have what you want. Now, the reason I say that is it is so easy to get advice nowadays. I mean, you literally go to any website in the world and there's going to be advice on it on how to do something. And so the problem is not getting information. The problem is we have information overload from hundreds of sources. And so what I recommend for you going forward, when you think about how should I be analyzing and learning and diving into better understanding my personal finances or my investments or anything like that, is look for people who have what you want and learn from them. When you find one or two or a couple people or several people that have what you want, lock in, absorb all of their content, their books, their courses, their programs, their coaching, their systems, their seminars, their interviews, like fully understand these people's minds because they got where they are for a reason. It was not a mistake. And so a lot of people that give advice or kind of share their opinions, they don't actually have the result to prove that they know how to do it. And so kind of the 4 people that I'd point you to that I've deeply studied and a lot of my philosophy and understanding about money and wealth building and all that is these 4 people I highly recommend. So Ray Dalio, Warren Buffett, Tony Robbins, and Ramit Sethi, all 4 are phenomenal. They've all written books, or at least in Warren Buffett case, he's been interviewed many, many, many times, and there have been books written about him. And then also reading his share letters, annual share letters to holders is incredibly insightful for a better understanding businesses and investments. So I'll leave you with that. Learn from people who have what you want. Find those few people and then just suck the knowledge as much as you can out of whoever those sources are. So have an amazing week, and remember that every week matters. It's so easy to forget of, what our goals are, what we're trying to work towards, why today is important. Remember that every single day, all we need to do is become a little bit better and make a little bit of progress. And as we keep doing that, we'll make progress every day, every week, every month, and every year. So have an incredible rest of your week, and we'll talk soon.